For the first time since January, Tesla's Model 3 has outsold Xiaomi's SU7 in China. According to insurance registration data, Tesla sold 14,000 vehicles between August 11th and 17th, with the Model 3 alone accounting for 5,200 units. In comparison, Xiaomi's SU7 came in at 3,600 registrations during the same week. That gap is meaningful because for months now, Xiaomi SU7 has consistently been among the best performing EV sedans in China. In its debut month alone, Xiaomi recorded over 20,000 registrations, and in the first half of the year, the SU7 managed to deliver more than 80,000 units, an extraordinary achievement for a newcomer to the EV space when compared to Tesla. At one point, weekly SU7 sales were outpacing the Tesla Model 3 by as much as 40 to 50%, with certain weeks seeing Xiaomi register close to 7,000 units. The backlog for the SU7 has grown so large that Xiaomi now faces delivery wait times stretching up to 59 weeks, showing demand that exceeds production capacity. Even with Tesla's latest lead, the SU7's rapid ascent highlights just how competitive China's EV market has become. The last time Tesla's Model 3 outsold Xiaomi's SU7 was back in January. That means this week's numbers mark a decisive shift in momentum. It isn't just about bragging rights. It signals that Tesla is finding renewed competitiveness in the Chinese EV space, a market that many analysts thought Xiaomi was starting to dominate. And the headline isn't only the Model 3. Out of Tesla's total 14,000 sales in that week, the Model Y contributed 8,800 units. That's almost 2.5 times more than the Model 3, and it secures the Model Y's position as China's best-selling electric SUV. Both vehicles are built at Tesla's Shanghai Gigafactory. That facility has become the cornerstone of Tesla's operations in Asia, serving not only China but also other export markets. The plant's scale and efficiency are one of the reasons Tesla can keep competing, even as new players like Xiaomi Neo, Li Auto, and BYD roll out new models almost every quarter. If we zoom out and look at the first 6 weeks of the quarter, Tesla's sales are 60.3% higher than what it managed in the second quarter. That's a big jump. However, compared to last year, Tesla's numbers are still down 2.1% year over year. So while Tesla has regained ground, the fight is far from over. The competition is fierce, and every percentage point matters in a market as massive and fast-moving as China's EV industry. Tesla has sold more than 340,000 vehicles in China so far this year. That's 5.9% fewer than the same period in 2024. On paper, that's a decline. But the latest weekly performance of the Model 3 shows that even with dips in overall sales, Tesla can stage comebacks when demand aligns with its product cycles. And speaking of product cycles, the refreshed Model 3 is expected to land in customer garages very soon. This version boasts an impressive range of 830 kilometers under the Chinese test cycle, which equals about 515 miles. The starting price is 269,500 yuan, or roughly $37,500 US. Deliveries are expected to begin in September, which means the numbers we're looking at today could just be the beginning of a bigger sales wave. But the Model 3 isn't the only new headline. Tesla is also preparing to deliver the Model YL. This is a new 6-seat variant of the Model Y, aimed at families who want more space without leaving Tesla's popular midsize SUV lineup. Priced at 339,000 yuan, or around $46,700, the Model YL enters the competitive 3-row SUV segment. That's a space where rivals like Li Auto and Onvo are already attracting attention with fresh models. In China, large family-oriented SUVs have been growing in demand. Tesla's decision to launch the Model YL shows a clear response to that trend. It also signals that Tesla isn't afraid to tweak its lineup specifically for the Chinese market, something it hasn't always done in the past. Meanwhile, Xiaomi continues to wrestle with its own challenges. The SU7 has been a smash hit, but production has not kept pace with demand. Delivery times have stretched to nearly 59 weeks. That's more than a full year of waiting for new buyers, which can sap momentum. Xiaomi also introduced its second model in June. This one is priced below the updated Model Y, but so far it hasn't reached large-scale production. That means Xiaomi is still very much a one-product company in terms of deliveries, while Tesla can rely on multiple vehicles rolling off the line at scale. In the same week that Tesla logged 14,000 sales, the company finished in third place among new energy vehicle brands in China. BYD and Geely Galaxy still held the top two spots. But Tesla outperforming Xiaomi in that particular week highlights just how dynamic the Chinese EV rankings can be. For context, BYD's numbers are still significantly higher. In some weeks, BYD's registrations cross the 60,000 mark. That scale shows the uphill battle Tesla faces. But when Tesla's Model 3 can outsell Xiaomi's flagship, it demonstrates that Tesla is far from being edged out of the conversation. It's also worth putting this into perspective. The Chinese EV market is the most competitive on the planet. It is dominated not only by BYD, but also by rising companies like NIO, Li Auto, XPeng, and now Xiaomi. Each brings unique strengths, from battery innovation to in-car technology to vertical integration. Against this backdrop, Tesla has sometimes been portrayed as vulnerable. But the latest data points prove otherwise. Tesla's ability to sell over 5,000 units of the Model 3 in 1 week, while also delivering nearly 9,000 Model Y units, speaks to the strength of its dual flagship strategy. Buyers who want a sleek sedan gravitate to the Model 3. Buyers who want versatility and space opt for the Model Y. Together, they create a sales backbone that rivals can't easily disrupt. Add to that the refreshed Model 3 coming in September and the new Model YL hitting the market, and Tesla suddenly has not just resilience, but fresh catalysts for growth. Each new product cycle tends to trigger demand spikes, and this time Tesla is introducing updates at a moment when competition is also adjusting to supply constraints. The financial picture is also worth examining. At a starting price of 269,500 yuan, the refreshed Model 3 brings in around $37,500 per unit before options. At 5,200 units in a single week, that translates to nearly $200 million in revenue from just the Model 3 in China in 1 week. Add in the 8,800 Model Y units, priced at around 263,900 yuan, or about $36,300, and you're looking at another $319 million in revenue. Together, Tesla generated more than $500 million in a single week from just these two models in China. Compare that to Xiaomi. At 3,600 SU7 units, priced starting at 215,900 yuan, or about $30,000, Xiaomi brought in about $108 million in that same week. That's less than a quarter of Tesla's total. So while Xiaomi's hype is real, Tesla is clearly ahead when it comes to sheer revenue generation. That gives Tesla more firepower to reinvest in factories, software, and service networks, all of which matter in the long-term race. Tesla's Shanghai Gigafactory is the linchpin here. It enables Tesla to scale rapidly and pivot production as demand shifts. With exports to Europe and Asia Pacific also flowing from this site, Shanghai has become Tesla's most important hub outside the United States. Its capacity is a major competitive edge against newer players that are still ramping up. This Tesla's latest victory over Xiaomi in weekly sales is more than just a headline. It shows that Tesla can still pull off market wins in the toughest EV battlefield in the world. It shows the continued relevance of the Model 3. It highlights the ongoing dominance of the Model Y. And it positions Tesla for an intriguing final stretch of the year as new products hit the roads. The rivalry between Tesla and Xiaomi is far from over. Xiaomi has the tech branding, the fan following, and the willingness to play a long game. But Tesla has global scale, manufacturing strength, and proven demand for its vehicles. If August's numbers are any indication, Tesla is not only holding its ground in China, but may also be preparing for another growth wave. For investors, fans, and competitors alike, that's a storyline worth watching closely.